For more on all this, the markets, the economy, Daniil Manaenkov, the head of U.S. Forecasting and Research Seminar in Quantitative Economics at the University of Michigan. Good to have you back, sir.
Thanks for having me.
I haven't been this confused for a while. I get it. It was doom and gloom for the last couple of months, and all of a sudden, the last couple of weeks, things have been on a rocket ship, right? Everyone's all bullish all of a sudden in the wake of all this negative news, and I'm starting to wonder that maybe the soft landing is very much possible, and that's what Wall Street obviously is thinking.
Well, I would certainly say that the chances of soft landing over the past 3 months have increased considerably. So, I mean, it's now fairly, well, I'm not going to say it's very likely, but it's quite possible that the Fed is going to deliver what it set out to do. And inflation is definitely slowed. We're not celebrating yet. We got like 3 good reports, and over that 3 good reports, the PCE core was still running about 3%. So, it's a little premature.
Let's just say we have 3%. So what? I mean, that's much better than 10, and I know it's not 2, but can we live with 3%? Because I get the feeling a lot of experts have said the same thing you have, that maybe 3% is the next normal.
And I mean, I would be happy to say that I would be happy with 3%, but for the Fed, the calculation is very different. So if they publicly say that we're okay with 3%, that sort of throws a wrench into all of their, I don't know, attempts to commit to future rates right now and in the future. That basically, I'm not going to say it's going to burn their credibility, but it's going to seriously ding their credibility when they say, we will achieve 2%. So 3% is much better than what we've been seeing of the prior year, which peaked at like 5.6%, I think. It's still not.
Here's the data we have so far, right? Inflation has pulled back, albeit not to where some people want it to be, but it's definitely pulled back. Job market remains tight. The unemployment rate remains low. The number of people remains high. The GDP has been on fire. I think we had a 3% hit. I mean, all the signs show that the economy is not really slowing down. I don't see any evidence that the economy is slowing down other than a couple headlines from tech companies laying people off.
Right, and I mean, that should worry the Fed a little bit, because if we had much weaker growth of the past half a year, the Fed would have been somewhat more confident that the inflation is going to continue slowing down. But given the strong data that we're getting for the second half of 2022, they would probably be a little bit worried if we, stop raising rates. Is inflation going to keep slowing down, or is it going to get stuck at 3% and maybe tick up? So
you had the CEO of Redfin, which is a real estate online. I'm sure many of you have been on it. And the CEO basically came out and said that they think that the housing market is in recovery mode now, meaning that the worst is over. And of course, you saw their stocks do very well. And these are people in the industry telling you that the economy is not slowing down, but rather turning around, making a U-turn, going back up. And if the Fed's reading the same things we're reading, like you said, they're worried, but what are they really going to do about it? Raise rates more? That doesn't make any sense, because they can raise rates all they want, but the long-term rates have not really gone up, at least the last couple of times they've raised rates.
Right, but I mean, if you look at what's been happening in the bond market over the prior several months, it seems like the bond markets at least started expecting a recession at some point, which would have prompted the Fed to cut rates sometime maybe late in 23 and 24. And if we are collectively going to revise our expectations that, there's not going to be a recession in 2023 and maybe even 2024, that also will filter into bond market and could push the rates for mortgages back up. And that will spoil the party to some extent. So, I mean, the situation remains quite volatile. You can imagine a scenario when there is a soft landing. It's also still possible to imagine a more severe recession, like some outlets out there are still expecting.
My producer is telling me I have 30 seconds left. So very quickly, what does the Fed do here in next week? I mean, they're going to make a decision.
Well,
some people thought 25, some people thought 50. I guess 25 seems to be the consensus. What do you think?
It's probably going to be 25 because the Fed does not like to surprise the market on a short notice. So it's probably going to be 25, but they're going to talk about if there's going to be more of these And my bet at the moment, there's probably going to be one more in March. After that, it's still uncertain. They may sit around for a year and see how things are progressing.
Yeah, what a interesting situation we have put ourselves in, where we actually want bad news so we can have good news later, I suppose. Daniil, good to see you. Have a good weekend.
Thanks for having me.